Good afternoon and welcome back everyone to Moneycontrol live stream. You're watching the closing bell and I'm Santosh Nair. Indices closed in the red for the 7th consecutive session on Monday, with the NSE Nifty falling below the 70,400 mark. However, the Nifty managed to trim some of the losses towards close of trade. It was down by almost 130 odd points at one point during the day, but managed to end the day about 72 points lower than the previous close. Mid-cap shares continued to be under pressure. Banking and realty stocks, which had been major underperformers over the past few trading sessions, they managed to make a strong rebound today and were among the only sectoral indices to close in the green. The India Volatility Index was down about 2.6% to 13.82. Among the prominent gainers of the day in the Nifty, we had ICICI Bank, Power Grid, Kotak Bank, SBI and HDFC Life. Whereas among the prominent losers, we had Adani Enterprises, Bajaj Auto, UPL, Tata Steel and Mphasis. Overall, with the exception of Adani Ports, all Adani stocks were under pressure yet again today. And with today's fall, the group has lost close to about 65% of its market capitalization over the last month. And let's now take a quick look at some of the stocks that caught our attention in trade today, starting with Voltas. The stock had seen a good rally last week and had crossed 900 rupees following reports of an early summer, which typically tends to boost demand for air conditioners. However, the stock has been unable to hold on to those gains. Now, Voltas has also been on the buy list of LIC recently, with the insurer increasing its stake in Voltas by 2 percentage points to close to about 9%, but all that buying interest still doesn't seem to be good enough to convince some of the critics, which also include Goldman Sachs. Goldman Sachs has retained its sell rating on the stock with a price target of 840 rupees. According to Goldman Sachs, typically Voltas tends to outperform during the summer month on news flow around the weather. However, even if you consider some of the peak summer years, the overall compounded annual growth rate has been 6 to 8% when you look at it over a 10 to 15 year horizon. Indian hotel companies is the other stock in the limelight today. The stock managed to hold ground in a weak market today. The company's MD Puneet Chhatwal was on CNBC TV 18 today, and according to Mr. Chhatwal, the business segment of Indian hotels has overall grown beyond pre-COVID levels, and also the company has managed to optimize its room to staff ratio by about 15 to 20% over the last 3 years. Now, hotel stocks have had a fairly good run over the last few months. However, since December, these stocks have been generally struggling in line with the rest of the market. This despite the fact that the third quarter numbers have come in quite strong for almost most hotel companies. And according to Mr. Chhatwal, the target of 33% EBITDA margin, which the company has set for itself, seems to be very much sustainable, and the company has also signed close to about 30 agreements in the last 4 quarters, and the pipeline now stands at about 70 hotels, 75% of which are management contracts. Mphasis fell sharply today. The stock was down by about 7%. Citi has rated the stock as a sell with a price target of 1705 rupees. Now, according to Citi, it had an interaction with the company's CFO, and some of the key takeaways were that the deal total contract value to revenue conversion was showing signs of slowdown. Overall, the mortgage business is likely to remain muted in the current quarter, and overall growth is expected to pick up only after the fourth quarter. The company has stood by its margin guidance of 15.25 to 17% in FY23, and according to Citi, at present the stock is trading at 22 times 1 year forward consensus EPS. Vardhman Textiles is the last stock on our watch list today. The stock has risen by about 5% over the last 1 month in a sluggish market. MK Stockbroking is among the brokerages which are bullish on the textile industry in general. According to MK, there have been a few key triggers for this industry, the main one being the softening of cotton prices. Cotton prices are now down by over 35% from their all-time highs seen last year, and also the capacity utilization as well as capex trends in the sector have been fairly encouraging. In fact, most companies saw significant improvement in their capacity utilization, and according to MK, Vardhman Textiles reported almost 100% capacity utilization during the second half of the third quarter. Also, the other important trigger for the textile industry is that demand has begun to pick up now that overall China has begun to reopen, and while Vardhman Textiles numbers were sharply lower than expected, in fact the operating profits dipped sharply, MK feels that the earnings may have bottomed out at current levels. MK has a buy rating on Vardhman Textiles with a price target of 440 rupees. And that's all that we have in this episode of Closing Bell. Thank you for watching, and we'll be back with you again at 9 a.m. tomorrow.